Hi friends, welcome to Insurance Decoder, and in this video I will tell you about LIC's Aadhar Stambh policy, which is LIC's plan number 943. In this video you will get to know about the features of Aadhar Stambh policy, the premium, examples, and we will explain the day maturity and death benefits, how you'll get, and all other features available related to this Aadhar Stambh policy. So let's start. Some important facts about this policy is that this policy is only for males. So females cannot buy this Aadhar Stambh policy. For females, LIC has launched Aadhar Shila policy, and I have already made the video on Aadhar Shila. If you want to watch, you can see the description box, and the link is also appearing in the I button also. From that you can get to know. So this policy is only for males, and this policy has targeted the middle class and lower middle class people who want to buy an LIC policy and are not able to pay big premiums of the LIC policy. For them, this policy is very good. Lower premium under this policy, no medical test is required, and you also get the loyalty benefit. So these are the prime points of this insurance policy. The eligibility criteria: you need to be a male. First thing is that, and minimum age at entry is 8 years. Maximum age at entry is 55 years. So you have the window from 8 years to 55 years to buy this policy. And the maturity age is 70 years. Minimum policy term is 10 years and the maximum policy term is say 20 years. So these are the eligibility criteria for buying this Aadhar Stambh policy of LIC. Minimum sum assured is 75,000, and after that it can be in multiple of 5,000 rupees, say 80,000, 85, 80, so and so on. There is no limit for there is a limit for the maximum sum assured, and that is 3 lakh rupees. So you can take from 75,000 up to 3 lakh rupees sum assured policy. Premium paying term is till the policy period. So if you take the policy for 5 years, then you will have to pay the premium for 5 years. If you take the policy for 20 years, then you will have to pay the premium for 20 years. Date of commencement of risk is immediately, because only kids above 8 years can buy this policy. So risk commencement will start immediately. Now let's see the two examples. First, we'll see what happens if the person remains alive till the maturity. And for that, we take the example of sum assured of 3 lakh rupees and policy period is 20 years. Age of investor is 30 years. So, and he wants to buy the policy for 20 years. So he will have to pay the premium for 20 years. And then the premium will be around 10,525 yearly. Or if he wants to take the monthly premium, then it will be 896 rupees every month. He will have to make the premium. So when the investor attains the age of 50 years, this policy matures after 20 years. So he gets the maturity benefit from LIC, and this maturity benefit will include the total fund of rupees 3,97,500 rupees. So these are the calculation based on the historical record of the payment by LIC. This may vary in future also. So you have to consult with LIC, and the components will include sum assured and loyalty bonus. So this is how this will work if the person remains alive till the maturity period. Now take the second example, and happens if the person dies before the maturity period. So take the same example. Age of investor is 30 years, and after 20 years this policy needs to be matured. So once after 4 years, when the investor's age is 34 years, he dies, and once he dies, the family gets the amount, and that amount will be in this case, so in this case it will be sum assured amount, and after 10 years if the person dies, then in that case policy amount is 3 lakh rupees plus loyalty bonus will be paid to the family member for 10 years. So when the person's age person dies later, his family will get more, because the loyalty bonus will keep increasing every year. If we talk about the other features, the tax exemption is available as per the prevailing tax rules. Premium payment options is available, that can be in monthly, quarterly, half yearly and yearly modes. And grace period is also allowed. It is 15 days for monthly premium payment and 30 days for quarterly, half yearly and annual premium payment. So this is the additional time period given to the insurance holders. So even if they are not able to manage the funds for the premium payments, then they are given 15 days a month for monthly premium payment. So within 15 days they can arrange the fund and pay the premium. And for quarterly, half yearly, they have given 30 days premium grace period. And the beauty of grace period is that if any claim arises during the grace period, the insurance company has to fulfill the claim. Loan against policy can be taken after 2 years of the premium payment, and this loan amount can be up to 90% of the surrender value. You can also surrender the policy, but for that you need to pay the premium for 2 years. If you have paid the premium for 2 years, you can surrender the policy. However, it is always advisable and recommended that you shall not think about surrendering the policy, because you will be having a big loss if you surrender the policy. So before you buy any kind of insurance policy, you need to think 2 times, 3 times, or 4 times, and you have to do the deep research. You have to read the brochures and insurance documents, and you also need to analyze your financial conditions. Only then you need to buy the policy. Once you have bought the policy, you shall keep paying the premium, and you shall uh, pay the premium till the maturity of the policy. This policy can be revived within 5 years of the last premium payment. If you, because of any reasons, you have stopped paying the premium, and thereafter, if you want to revive the policy, you have that 5 years time limit. Within that, you can go and revive this policy. For that, you will have to pay all the due premiums, and you will have to pay the interest. And if any penalty is there, you will have to pay that amount, and then this policy will be reinstated. Payout options. So for the maturity and death benefits can be claimed in a single lump sum amount. So the entire amount will be paid at the end of the maturity or on the death of the insurance holder in one amount, one lump sum amount. Or this can be availed in installments of 5, 10, and 15 years. So if you are opting for the 5, 10, and 15 years option, then LIC will be giving you interest on those installments also. But one thing that you have to note is that this installment option and this single option, these need to be opted by the insurance holder. If the insurance holder died, then the nominees cannot opt the payout option. Whatever the insurance holder has opted, insurance company will pay according to that only. So this right of opting the payout is available with the insurance holder only. So that's all for the Aadhar Stambh policy. I hope you liked the video. If you like the video, please don't forget to smash the like button. And if you are not subscriber to my channel, please subscribe to my channel. This is my personal request. We are making very beautiful videos. Whatever suggestions, comments you have, please don't forget to write in the comment box. So we may also improve on certain parameters so that you keep liking our videos. And I really appreciate that you have given your time, valuable time. Everybody's time is very valuable. You have watched my video and now you are liking and commenting. Thanks a lot for that. Thanks a lot. Keep watching Insurance Decoder.